Okay, lots of earnings and lots of stocks on our radar, flat for the market, but let's address some dhamaka earnings. And Berger Paints surely was one such set. So let's welcome on board Abhijit Roy, the MD and CEO at Berger Paints, joining in the show right now. Abhijit, hi, good morning. We're terming your earnings a dhamaka set. It surely has been a dhamaka for you. From the last time that we spoke, when only the high-end premium segment of the paints category was doing well, now you've seen a big push and rising uptrend in the affordable housing segment as well. Help us understand what's been your observation, how Q3 has been, and whether it's the high-end premium segment which continues to drive growth for you.
So Q3 was, as you said, very good. Demand was very robust across all segments, and most markets did well. So the upcountry markets continue to do very well. The cities are coming back to normalcy. It's picking up momentum every month. So from that perspective, overall, it was a great quarter. Industrial side also, automotive revived from the low bases that they had. In the protective and powder, we had a double-digit growth as well. Though they can, progressively keep doing better from now onwards.
Sure. Abhijit, how much of your sales and volumes are still a function of pent-up demand, or would you say that new demand or fresh demand is getting created as well?
No, so a large part of it is fresh demand. There was some pent-up demand in Q3 for sure. Also, the season was a bit delayed this time. As you are aware, the Diwali was slightly late. Typically, when the Diwali is late, we tend to do much better in that particular quarter. So that way, we had an advantage. But it's not as if, there's a large segment of the pent-up demand. There was some pent-up demand which was there. As of this quarter also, it's been reasonably good.
Morning, Nikunj also joining in. When you say in this quarter the demand has been strong, are you comparing that with the last quarter, which is the quarter gone by, or are you comparing that with COVID levels, or are you comparing that with last year? Because there are three comparisons here.
Good morning, Nikunj. Last time you had mentioned that when will paint industry go down to those 17-18% level. So we have gone beyond that in the Q3. This quarter we will be, if normal demand is to be taken, we will be in that mid-teens range. But since the bases are on the lower side in March, so therefore the overall quarter growth will be quite strong.
There is a new big player, Grasim, backed by the Birlas. They are planning to enter the paint market. JSW Steel has already started a paint company. Now the Indian paint industry is almost like a three-player market and one small player. Now two big corporate houses are coming into the paint industry. Does that excite you? Does that worry you?
So it's always good to have competition, which are responsible competition. It is not worrying, as such, but it is really exciting in the sense that it keeps us on our toes. Also, it helps us to focus on our business much more strongly. Our main objective is to keep growing and keep doing what we have been doing so far, improve on it, innovate, and therefore strengthen our position. That's the objective that we will stick to. At the end of the day, it's the consumers who will decide what is best for them.
Fair point, but there are two ways to look at it. One, what is good for shareholders may not be good for consumers. And what is good for consumers is always a function of competition. So if competition will intensify, consumers may be happy, but shareholders may not be happy.
So, it's the objective is to probably help both, So if you are able to, or we are able to satisfy the consumers better, we will always satisfy the shareholders as well. There has been always competition in the industry. It's not as if it has been bereft of competition. Major international players have come in the past. They have all tried their hand in the Indian market. JSW has been there for some time now. Birlas will also join in. So we are prepared for that. I don't think we need to be unduly worried. They are responsible competitors. We will fight as competitors do in the marketplace.
Can you share with us that what kind of pattern are you seeing in terms of demand? Is demand very granular, which is across categories, across India, or there is specification within the demand surge purely based on geographical classification or category classification?
No, it was, secular in nature, almost like the upcountry demand, of course, has been very strong, especially the tier 2 and tier 3 towns. The metro cities have been, coming back to normalcy, have almost come back to normalcy now. As far as the product, premium or economy, so the economy and mid-premium segments did well. The premium categories picked up momentum, from October and November onwards, and has been doing quite well now.
Okay, fair enough. Are you also looking at perhaps a new set of launches going forward, diversifying or the product range, particularly the interior segment, where you have the opportunity to do so vis-a-vis your peers?
Yes, so there are two things which we are doing. Of course, one is the waterproofing segment, which we have entered, and we are quite hopeful that, we will have a strong presence in that particular segment. The other is in the interior segment, as you rightly mentioned, we have introduced a product called Silk Breathe Easy, which is, antibacterial, antivirus, and also anti-pollution. So, well certified by international and national organizations. We started advertisement, just about, in the month of October. The first round is over, and we will, start from mid-February again. This particular product is doing well, and we hope that, this will help us to establish ourselves relatively much more strongly in the luxury segment of the interior emulsion.
All right. And on distribution as well, any plans there? I'm just trying to get a forward-looking sense, since you've seen that pick up in a rural semi-urban markets, any plans also to, up the kind of distribution you have in those areas?
Yes, and we've been, we have done this, from April onwards of last year. We've been strengthening our position there. And we have increased our dealer network. So that is a constant work, of course, in the paint industry. But, in the last 1 year, we have given special focus, and going forward also, we will strengthen this part of our, business.
Abhijit, just want to, delve into and try and understand this a little bit better. Crude is making a comeback after a long time. What kind of lag does it reflect on your derivative costs?
So it is, about 2 to 3 months of lag, because, you have finished goods, which is already lying with you at a lower cost of earlier prices. And then you have also raw material, which is also sometimes stocked up. So therefore, typically it takes about 3 to 4 months of lag effect to kick in. Meanwhile, the crude prices keep fluctuating up and down, and then it stabilizes at certain points sometimes, and otherwise, it keeps fluctuating. As of now, there are certain prices which have gone up, while others are more stable. So we'll have to keep watching, because some of these prices, they go up because of shutdown of factories elsewhere in the world. And then once they start, again, the prices tend to come down. So the monomers is a typical example, which is a derivative of crude. It prices had shot up, but again, it has started softening a little bit. So you don't know actually what will happen going forward. It's difficult to predict as well. So we wait, and if the trends are very, strong that it is going to keep rising, then we obviously have to look at, increasing our prices.
I was just going to come to that. The increase in prices may actually come in at the cost of a volume hit. Would you be able to do that, or would you be able to sustain it if indeed crude prices continue to be at an uptick?
Yes, see the price increases are, to the tune of, typically in the paint industry has been about 1.5–2%, overall. It doesn't impact so much, the volumes as such. It's not as if, we are taking some 7% increase. So it is a nominal increase which is always taken. It depends on, as I said, the raw material prices, whether it keeps, sustaining themselves at these high prices. Obviously, we will have to take it, but we are assuming that some of it may settle downwards. So in that case, we don't have to take those price increases.
Great to have you on the show. Thank you so much, Abhijit, for taking the time out and speaking with us.
Thank you. Thank you.